What's up guys, Emmanuel from Wyze.trading here. I just want to go over a couple things, how to become a profitable trader in 2024. Before we get into this, I just want to let everyone know, if you click the link down below, I have a free webinar going on this Friday, May 31st, 4 p.m. Eastern Standard Time. If you're not a part of the Discord, join the free Discord. Link is also down below. And the link to my website for my courses and my Discord are also down below. Some people will give you the basic ICT, supply and demand, support and resistance, but there's a lot more things that go into it. First, we need to address that. We need to learn a technical analysis form of trading, which, like I said, would be supply and demand, ICT, Fibonacci levels. There are plenty of forms of trading. You just have to tackle one of those first. Me personally, I'm a supply and demand trader. I believe that's what moves the market. You just have to pick which kind of trading you want to get into. Once you learn that and technical analysis is mastered, which in my opinion, again, it's the easiest part of trading. Technical analysis is pattern recognition. We've been doing that since we were kids, since we were babies. That is how we evolved, and that's how we're still alive to this day. Every human has pattern recognition. Once technical analysis is mastered, like I said, we have to find our edge in the market. This is where the highest probability you will have to make a good trade and a profitable trade. And this will come from your technical analysis standpoint to see where the market's going to move. Now, to develop this edge, you are going to back test your technical analysis and your thesis of the market. Once this is done, you take all of your trades or your possible trades where you deem edge is present, and you rank them from A through D, or A through C. A being the highest probability trade, and C being the lowest probability trade. Personally, on those trades, you could size down the C or D trades or not trade them at all and only take high quality setups. Once you find your A and B setups, you're going to figure out that there's a lot less room to actually trade in the market, and you shouldn't be taking as many trades that you are doing right now. Once you find those setups, you add confluences in the market to guide those setups to be more probable. For example, volume is the biggest confluence I use. We need volume to move the market. Volume means more participants, means more volatility, which is movement in the market. Without movement, you'll be trading in chop. Trading in chop is the absolute worst thing. I go over this in plenty of videos. That chop trading isn't an actual true risk to reward. The actual chances of you getting a actual good risk to reward in a probable trade in chop are very, very low. It's not even 1 to 2%. So again, with added confluences like volume or the top equities, I go over a bunch of them in all my videos, what I look for. This is gonna help deem your thesis of the market moving in your favor valid. Right, your probability is going to go up even higher, and the possibility of your trade hitting your profit target versus your stop loss is a lot greater. Now, like I said, once we deem a right thesis where the market's going to go, we're going to judge where our stop loss and our take profit will then be set before we enter in the trade. This is absolutely key. You cannot get into a trade and then look for a stop loss and profit target. It's not how it works. You have to know exactly where you're going to enter and exit before you even press the buy or sell button before you're in a trade. Now, once we deem this valid or our confluences line up with our edge, we take the trade. We do our best to manage emotions inside the trade now. If our stop loss hits, we have to exit the trade. There's no exceptions, no if, no buts, no ends. When thesis is deemed invalid, we need to exit the trade. Same thing with our take profit. We do not get greedy. We take out 80 to 100% of our take profit. If we take out 80, we let the other 20% ride up and make a new thesis where the market will then be deemed invalid, where our new stop loss will be set. Now, to help with emotions, right? To help with the psychological part of trading, we need to make sure we're trading with a low amount of capital that we do not care to lose. Now, overall, the low amount of capital has to be a low amount of our total account balance also. For example, if our account is 100 grand, we want to be trading with $1,000 or $1,000 loss for the day. If our account is 100 grand, we want to be trading with 1% of our account. Now, there's also a problem that not a lot of people get into when you have a small account, maybe a $3,000 or $5,000 account. You do not want to be trading with a $30 loss. That personally is not worth your time. For me, that's not worth my time. Everyone has their own judge on how much their time is worth. So as our accounts are smaller, we're going to initially risk more. No one wants to sit at the computer all day long for 8 hours to make 30 bucks or 80 bucks. It's just not worth it. Most people will say this is not right, but that is the reality of life. No one wants to sit at the computer all day long and make possibly 50 bucks or 80 bucks. So if our account size is smaller, we're always going to risk more. I don't care if I tell you you have to risk 1%, There's no way that you're going to sit at the computer for 8 hours a day to risk 30 bucks and possibly make 60 bucks. Maybe for the first week, but as you see the profits roll in, as you see people making thousands of dollars, it's very hard to stay disciplined like that. So I'm not going to lie to you and tell you that you have to risk only 1%. You're obviously going to risk more, maybe 5%. Some people are risking 10%, but as your account grows, you're going to initially risk less and less, and you're going to be a safer trader. If we all followed the books, it would be very different. But like I said, there is absolutely no way that you're risking 1% on a $1,000 account. So again, from start to finish, we need to find a technical analysis standpoint. We need to add confluences with that and find edge with our technical analysis. We need to back test this and find where our analysis is correct, and we find edge in the market. Through that, we need to manage emotions, right? We need to be okay with losing a certain amount of money that we're risking. And some bonus tips I'm gonna give you here are you should journal. If you're a part of my Discord, I have a free journal for everybody. And also, if you're a part of my Discord, send me your trades. Now for my premium members, I literally answer all the time. I'm on my phone. If you're a premium member and you DM me, it's literally like as my friend texting me, I'm going to answer right away. If you're a free member, if I'm free and I'm not doing anything, I'm 100% going to answer you right away, but I always answer within an hour, 2 hours to the free members. So I hope this helped. Check the links down below. I have my Discord, my master course, and my inner circle.